Welcome to the Qnews Economic Bulletin. I'm Henny Sif, and we will bring you the latest developments shaping the global economy, from key market trends and financial updates to regional economic highlights and forecasts. We provide essential news and analysis to keep you informed. Welcome back. We'll start off with the United States, as the Labor Department's job openings and labor turnover survey report has shown that U.S. job openings dropped by 556,000 in December, the largest decline in 14 months. However, steady hiring and low layoffs suggest the labor market remains stable. Professional services, healthcare and finance saw the largest drops. Despite the decrease, there are still 1.1 job openings for every unemployed person. Fed Chair Jerome Powell reaffirmed there is no rush to adjust interest rates, with markets now expecting a possible cut by June. The U.S. services sector growth slowed in January, with the Institute for Supply Management's Non-Manufacturing Purchasing Managers Index dropping to 52.8, down from 54 in December. The Purchasing Managers Index, reading above 50, still signals sector expansion, but the decline reflects cooling demand. New orders fell, pulling the prices paid for services inputs down to 60.4 from December's 64.4. indicating a slowing of price growth. Services employment rose slightly, but it hasn't been a reliable indicator for official payrolls data, which will be released on Friday. Economists expect 170,000 new jobs in January, with the unemployment rate holding at 4.1%. On another note, China has called for dialogue with the U.S. after new 10% tariffs on all Chinese products took effect on February 5th. Spokesperson Lin Jian criticized the tariffs, stating China firmly opposes them. In response, China will impose counter tariffs of up to 15% on U.S. imports starting February 10th. He added that the fundamental way to solve the drug crisis is reducing demand for drugs at home and enhancing law enforcement cooperation. However, President Donald Trump said he is in no hurry to speak with Chinese President Xi Jinping despite rising trade tensions. His sweeping 10% tariffs on all Chinese imports took effect Tuesday, prompting China to impose counter tariffs and announce possible sanctions on U.S. companies, including Google. Meanwhile, Trump has hinted at potential tariffs on the European Union. EU leaders say they are ready for tough negotiations, but will protect their interests. China is also tightening export controls on key metals and investigating U.S. firms while leaving room for talks.
They've taken advantage of the Biden administration like I've never seen.
In a related context, China's foreign ministry expressed the country's willingness to work with the European Union to tackle global challenges as the bloc faces potential U.S. tariffs on its exports. Spokesperson Lin Jian emphasized the growing strategic importance of China-EU relations amid global risks of division. The European Union's trade chief, Ursula von der Leyen, called for swift talks with the U.S. over President Trump's tariff plans, but warned negotiations would be tough. Von der Leyen also highlighted the EU's approach of de-risking its relationship with China while exploring opportunities to expand trade and investment ties. The German Economic Institute has reported that the country's economy is set to suffer from new U.S. tariffs on imports from Canada, Mexico and China. The report estimates that Germany's economic output will be 0.4% lower in 2026 due to the tariff measures, as many German-made components are processed in these three countries before being exported to the U.S. The study also projects that the tariffs will lead to cost losses of approximately 25 billion euros for Germany's economy in 2025 and 2026. A senior Bank of Japan official has told the parliament that the Bank of Japan will continue raising interest rates if underlying inflation moves steadily towards its 2% target. Speaking in the parliament, Kazuhiro Masakai, the BOJ's Director General of the Monetary Affairs, emphasized that while inflation remains below the target, monetary policy must still support economic activity. Masaki noted that Japan's most pandemic inflation has been driven mainly by rising raw material costs, but these pressures are expected to ease. Instead, higher wages are gradually pushing up services prices, supporting the Bank of Japan's inflation outlook. Official data revealed that Indonesia's economy grew by 5.03% in 2024, maintaining similar growth to the previous year but marking the slowest pace in 3 years. The result aligns with expectations but falls short of President Prabowo Subianto's 8% target by 2029. Growth drivers included government incentives like property tax cuts, higher wages and central bank rate cuts. In the fourth quarter of 2024, GDP grew 5.02%, with household consumption rising 4.98%, bolstered by holiday spending. Nigeria's President Bola Tinubu has raised the 2025 budget to 54.2 trillion naira. Tinubu announced the increase in a letter to the Senate on Wednesday. This new figure represents an increase from the previous figure of 49 trillion naira. A Reuters survey has shown that OPEC oil production declined by 50,000 barrels per day in January, reaching 26.53 million barrels per day. The drop was driven by lower exports from Nigeria and Iran, despite a production rebound in the United Arab Emirates. Nigeria's output fell by 60,000 barrels per day due to weaker exports, while Iran's production also declined by the same amount amid concerns over potential new U.S. sanctions. Meanwhile, Saudi Arabia and Iraq saw slight reductions, while Libya raised output by 40,000 barrels per day. Oil prices dropped over 1% on Wednesday as rising U.S. stockpiles and concern about a new Sino-U.S. trade war fueled fears of weaker economic growth, offsetting U.S. President Donald Trump's renewed push to eliminate Iranian crude exports. Brent crude futures were down 1.3% at $75.22 a barrel. U.S. West Texas Intermediate crude was down 1.3% to $71.76 a barrel. Gold prices continued their record run on Wednesday as investors sought the safe haven asset amid escalating concerns about the U.S.-China trade war and its potential impact on economic growth. Spot gold was up 0.8% at $2,864 per ounce after hitting a record high of $2,877 earlier in the session. U.S. gold futures gained 0.4% to $2,885.90 per ounce. The World Gold Council has reported that global gold demand, including over-the-counter trading, rose by 1% to a record 4,974.5 metric tons in 2024. The council noted that central banks accelerated their purchases, with Poland leading the way, adding 90 tons to its reserves. Spot gold prices surged 27% last year, marking the biggest increase since 2010. As investors turn to the metal amid global risks and falling U.S. interest rates. Investment demand jumped 25%, reaching a 4-year high, while demand for gold-backed exchange-traded funds rebounded.
Global gold demand reached a record 4,974.5 metric tons in 2024, driven by rising investment and aggressive central bank purchases. According to the World Gold Council, central banks accelerated their gold buying in the fourth quarter, with Poland leading the way, adding 90 tons to its reserves. Spot gold prices surged 27% last year, the biggest jump since 2010, as investors turned to the metal to hedge against economic uncertainty. Prices hit another all-time high on Tuesday after China imposed retaliatory tariffs on the U.S., reigniting trade war fears. Investment demand soared 25%, reaching a 4-year high, while gold-backed exchange-traded funds saw an influx of funds for the first time in years. Meanwhile, demand for gold coins dropped by 31%, signaling a shift in investor preference. Experts expect central banks to continue driving demand in 2025, with geopolitical and economic uncertainties keeping gold an attractive asset. However, high prices are weighing on jewelry consumption, which fell 11% last year. With inflation concerns and trade tensions mounting, investors are keeping a close eye on the U.S. Federal Reserve's next moves, which could influence gold's trajectory in the months ahead.
And joining us now from Cairo is Mr. Ihab Wasif, head of the gold division at the Egyptian Industries Federation, to discuss the latest developments in the gold market. Sir, welcome to the Qnews Economic Bulletin. What factors contributed to the record global gold demand of 4,974.5 metric tons in 2024? And how do you foresee this trend evolving in the coming year?
Hello, I would like to start by that the gold has just hit like a few hours ago the highest point of 2,877, and now we see it hitting another record with 2,878, and that's a new record for the gold prices. We see it like all these investors in the stock markets are heading to invest in gold as a safe haven for investment. That's a point now. We are seeing many threats for the economy of Canada, Mexico, China. We see imposing custom duties on these three countries from the United States. We are still watching the economic condition of the United States, how things will be going, the inflation of the United States, how the curves will be going for the inflation. From my own point of view, that economic sanctions on Chinese imports to the United States, that will affect the inflation in the United States, and it will make it higher and higher. So that's why I see that the investors are hitting to gold and precious metal as a safe side for them or safe haven for investment.
Mm-hmm. Mr. Wasif, central banks have been aggressively increasing their gold reserves. Poland added 90 tons in the fourth quarter. What do you think is driving this shift, and how sustainable is this? Do you expect other European countries to also add more tons of gold to their reserves, maybe? eyeing a potential U.S. tariffs being imposed against European states?
Yes, the countries, the central banks of many countries are now putting their reserves in gold as a safe reserve, because we see that economic global is changing, especially with the United States, with the European Union. So that's why we see like a country like China with keeping many reserves in the first half of last year. We see Poland already had a lot of gold. Egypt as well is keeping some gold reserves, buying gold reserves. So we see it like the safe side, and it's like a belief for the countries is that they have the foreign currency as well as gold as safe side for their economy.
Mm-hmm. Well, the gold prices surged by 27% in 2024, and you've pointed out to the increase that actually took place moments ago. Now, this is the biggest jump since 2010. You've informed us about the main factors that contributed to this increase, but do you expect gold prices to maintain this upward trajectory in 2025? And if so, then for how long and by how much?
Okay, I will tell you something that will answer the question. Since 1st of January, gold price has been increasing for around $250 US. That means around 10% increase since the beginning of the year. And this is like a big increase. We see today only 1.22% increase in the gold. Yesterday we saw the same number. Every day we are seeing an increase in the gold price. So this is, I see it like an arrow of the gold price for the 2025. How is it going? How it will be going according to that arrow. I think gold is close to hit new records more and more and more.
Mm-hmm. So now, how significant really was the impact of China's retaliatory tariffs on the U.S. and sparking the gold's all-time high? Do you believe the escalating trade tensions could continue to drive gold prices? Do you also believe that maybe other political developments taking place around the world would prompt many countries to increase their reserves in gold?
Yes. The answer is simply yes, because we will see that all the investors are going to invest in gold as a reserve for them, as a safe haven, as I told you before. So we'll see higher demand from the central banks to keep gold reserves. We'll see investors are going to gold as safe haven. We'll see normal people are buying physical gold as an investment for them when they see that the gold price is increasing. This is worldwide, not only in Egypt, but worldwide. We'll see many people are rushing to buy gold, and this will keep the prices increasing more and more.
Mm-hmm. Mr. Ihab Wasif, the head of the gold division at the Egyptian Industries Federation, thank you very much, sir, for joining us. And now we move on to the latest developments from the MENA region. Egypt's net foreign exchange reserves increased by about $154 million during January compared to December. Net international reserves rose to $47.265 billion at the end of January 2025, up from $47.109 billion in December. Over the past 11 months, following exchange rate liberalization, foreign exchange reserves increased by approximately $11.8 billion. Driven by the Ras Al Hikmah deal with the UAE, worth $35 billion. Egypt has signed an agreement with the European Bank for Reconstruction and Development to establish the Egypt account, providing 10 million euros to boost public-private sector partnerships in future initiatives. Prime Minister Madbouli reaffirmed and confirmed that the memorandum seeks to establish a general framework for the technical support provided by the Bank of the Egyptian government. This support will focus on institutional development, capacity building for all relevant parties, as well as providing technical assistance for the implementation and preparation for public-private partnership projects. Still in Egypt, the country has signed a €1.4 million development grant agreement with Spain to fund the preliminary feasibility study for the extension of Cairo Metro Line 1. This initiative is part of Egypt's sustainable transport projects under the NWFE National Platform, aimed at enhancing eco-friendly and efficient urban mobility. The agreement was signed by Rania Al-Mashad, Minister of Planning, Economic Development and International Cooperation, and Eduardo Soriano, Spain's Economic and Commercial Counselor in Egypt. In addition to the extension of Cairo Metro Line 1, ongoing initiatives include the electrification of Alexandria's Abu Qir Railway, which will be transformed into a modern metro system to enhance urban connectivity. Egypt is set to receive the Turkish floating storage and regasification unit, BOTAS, in June, which will supply the local market with up to 500 million cubic feet of natural gas per day. This initiative aims to enhance electricity generation capacity during the peak summer months. The agreement between Egypt and Turkey stipulates that the Turkish vessel will receive shipments of liquefied natural gas converted into natural gas and supplied to Egypt from June to November. The World Bank Group has prepared for the second phase of its budget support program for Egypt, which is set to be completed this year. This follows the successful disbursement of the first phase, valued at $500 million in mid-2024. The program is part of a broader $6 billion support initiative announced in March 2024, aimed at boosting Egypt's economic stability and private sector engagement, with the total value of ongoing projects in Egypt ranging between $6 and $7 billion. The World Bank remains a key partner in supporting the country's economic transformation. The UAE's non-oil foreign trade hit a record 3 trillion Emirati dirhams in 2024, marking a 14.6% annual increase over 2023. This growth is part of the country's broader economic diversification strategy. Minister of State for Foreign Trade, Thani bin Ahmed al-Zayudi, highlighted the impressive rise in non-oil exports, which reached 561.2 billion Emirati dirhams, marking an increase of 27.6%. This growth in exports now accounts for 18.7% of total trade. In the global markets, stocks showed a mixed performance during Wednesday's trading session. The future of the S&P 500 declined 0.11%, while that for the Dow Jones Industrial Average inched up 0.12%. In Europe, France's CAC 40 dipped 0.36%, while Germany's DAX increased 0.17% and Britain's FTSE 100 hiked 0.46%. In Asia, Hong Kong's Hang Seng decreased 0.93%. In Tokyo, the Nikkei 225 index inched up 0.09%, and Australia's S&P ASX 200 rose 0.51%. These are all the economic news we have for now, but please don't forget to follow Q News on YouTube, Facebook, X, Instagram and TikTok at QNews EGY to stay informed. I'm Henny Saif. Thank you for joining us.